It's been a year of steady gains for Blue Star, with the counter advancing over 47% so far in this year. What have been the key factors at play aiding and denting the stock? In fact, let's ask the management. Joining us is the Executive Director, Mr. B. Thiagarajan, who's joining us on the show now. Good morning, Mr. Thiagarajan, and appreciate you joining us today on BloombergQuint. Well, my first question to you is, from what we understand, Blue Star is in that investment mode for some of its key segments. If you could tell us what are these key products, and can you also elaborate on the investments that you are committing to the related product lines as of now?
I will not exactly call it as a investing mode or something like that. The very first thing is that we are on a growth mode. The consequent demonetization and subsequently GST, there were some kind of slowdown in the market. We need to revert to growth path in line with the market and try to exceed the market growth. So growth remains an important priority. There is no doubt about it at all. The second one is with regard to the profitability and the margins. Commodity prices have been going up, and we consume a lot of metallurgical items, steel, copper, so on and so forth. Therefore, how we will go ahead and correct the prices and also optimize the designs in order to protect our margins. So this is the second priority. The third priority is with regard to the excellence in whatever we do. We are a successful player, leaders in most of the product categories in which we operate, basically because we have differentiated offerings. We have positioned ourselves as experts in this business. So therefore, investments will have to go in terms of offering that excellence to the consumers, both in terms of goods sold and services rendered. So there is a program on project execution excellence, there is a manufacturing excellence program, there is an after-sales service excellence program. Those investments continue to take place. The next one is with regard to the penetration. When we say our all India market share has touched 12% in room air conditioners, it is not across the country we will have that kind of a market share. There are pockets, say in northern India, Uttar Pradesh, or Bihar, or in northeast. Our penetration is low, and while distribution network expansion is going on, we need to invest in brand building, or basically the advertising as well as field marketing initiatives. Those investments continue. The next important one is the water purifiers business, where other than the air conditioning and the refrigeration part of it, there are two areas in which investments are going on. One is the water purifiers business, where it is an independent business unit pursuing purification of water for residential space, and that business is scaling up now. We need to persist with our efforts in that area so that we position ourselves as one of the key players in that product segment. The other area is the exports. The international business, we are expanding our footprint in Middle East as well as Africa and Far East and SAARC countries. That investment will continue. Lastly, the manufacturing capacity requirements in line with our growth. We foresee we need to expand our manufacturing capacity for room air conditioners, for refrigeration products like deep freezers or water coolers. Somewhere in 2020, we need to have additional capacity. So we went ahead and invested in land in Jammu as well as Sri City in Andhra Pradesh. Jammu project is conceived based on certain excise concessions at that point of a time, translating into GST benefits. Those benefits do not seem to be available as per the latest notification that is available. We are awaiting further clarification. In case the excise equivalent, which is the CGST benefit, is not available from Jammu, we may not be able to continue with that project. So that decision will be taken soon. Then we will go ahead with the expansion activity in Sri City. In the meanwhile, for FY19 or most part of FY20, we do not see any kind of a capacity constraint in terms of manufactured products at all. So therefore, when I want to again emphasize that our top priority is growing better than the market. The second one is protecting the profitability and improving it. The third one is differentiating ourselves through the excellence programs in manufacturing, project delivery, in service, in whatever we do. And the next investment is the penetration, therefore Blue Star brand building in those markets so that we have enough customer pull. Water purifier business and international business as additional area.
Okay, so Mr. Thiagarajan, I was also going through your positioning in the AC business, and that market share stands around 10 to 11%, and in India at least. And currently, some of your products are also priced at a premium. So I want to understand how you have positioned yourself when it comes to your air conditioning business, and if you could tell us also a little more about what your strategy is, keeping in mind competition when it comes to your ACs business.
Between growth in market share and profitability, I think our interest will be growing profitably. We don't want to buy market share at all. So this has been the principle for many decades, and we continue to do so. Second one is that we should offer globally competitive products, world class, the latest and the best. So if you look at any of the products that we offer, they are superior, world-class, comparable to the best in the industry. If that is the case, it gets positioned as a premium offering. So our own brand positioning is like that. Now, whether the product is available in all price points, in some cases it is not so. Like water purifiers, when we entered, we occupied the top-end products, basically because we wanted to target the market, build an image there, and then go down to offering products at various price points. Similarly, in room air conditioners, we may not have products for certain markets, like let us take, for example, Uttar Pradesh, Bihar, the Punjab, where it is highly price sensitive. We may not have a product offering. Even in those markets, we want to be a differentiated premium player rather than run-of-the-mill kind. And that has been the philosophy in our marketing all along. And therefore, whether we have an aspiration to become a number one player in room air conditioners, number one in terms of the products that we offer, yes. But in terms of market share that I have to buy and be in all segments of the product, I don't think so. It is not. The companies have to make a choice, and in our case, we have made this kind of a choice. And therefore, we will try to grow more than the market, anywhere between 5 to 10%. In some quarters, it may not take place. It is perfectly fine. But in the long run, in room air conditioners, we would like to grow anywhere between 500 to 1,000 basis points more than the market, so that our market share grows to 12.5. This year we will end up around 12% market share, and the next year we should attempt anywhere between 12.5 to 13, and the year after somewhere around 14. So it will have a limitation. You will not be able to say that I'm going to be a 25% market share holder. In many other products, we have more than 30%. Take packaged air conditioning, take the scroll chillers that we offer, take water coolers that we offer in cold rooms, in deep freezers. These categories, we dominate the market close to 1/3 share. And this has been our strategy. We will continue to pursue that.
Okay, so you're looking to get about 12% market share for this financial year in the AC segment, and next year could be almost 13%. But reports do suggest that low margins in the electromechanical space are bottoming out, and they will improve from here on. If you do agree to that, could you tell us what will exactly drive the margins for the company from here on?
In electromechanical projects business, after many years of experiment, we have decided that we will be very selective in terms of bidding for the jobs, number one. It has to be profitable, it has to provide positive cash flow. And these two considerations are very important. Therefore, we bid for projects where we feel confident that the project will get completed in time and there is sufficient profit that is available, the payment terms are good. This is how we have been pursuing. In the process, we are now seeing there is, in terms of financial discipline, it is excellent, execution discipline excellent, cash flows are very good. I won't say it is good compared with the previous years. Now in this situation, what we have to wait for is the opening up of the construction cycle. Unfortunately, it is not taking place for one reason or other. There was demonetization, there was a RERA Act, and so on and so forth. Actually, the commercial construction boom is not yet there. It will happen at some point of a time. In the meanwhile, we will continue to grow, basically because we have been very choosy. We are starting from a lower base. Year on year, that business will continue to grow, and there is absolutely no doubt about it at all. Coming back to the commodity prices, it is most items are going up, and fortunately we had a control over the foreign exchange till now. I have a feeling even foreign exchange issue may come up again, and it is a tightrope game, but we will ensure that our top line grows, our bottom line grows. And in the process, we are not able to get market share. It is perfectly fine with us at this point of a time. The primary importance is growth, and that too profitable growth.